Welcome to the Nichols Tax Update podcast. This is our regular disclaimer. Of course, you can read that, but I want to read the last paragraph because I acknowledge the value in preparation of this program of my subscription to Tax Notes Today. Published by tax analysts, it is, in my opinion, the preeminent source of daily information on U.S. federal tax law for tax professionals. Let's see what we have to work with this week. It's a short week, holiday week, not a lot of people working, but the courts and the IRS continue their tasks. 5 items. A label doesn't determine the self-employment status of a rental activity. What you call it doesn't have as much to do with how it's classified as how it is conducted. Next, insurers are heading for the exit on conservation easement donation deductions claimed by, the insurers are heading for the exit on insuring claims against professionals, accountants and attorneys with respect to conservation easement donation deductions. Next, we get affirmation again that the IRS mailbox rule survives challenges. Just mailing is not good enough anymore. You must prove mailing. Next, final foreign tax credit regulations. What a colossal read that is. Restrict the creditability and tighten the rules on a foreign tax credit. And finally this week, the tax court reminds us that their Dawson search function can now be used by anyone for 7 different searches. Well, that's an interesting list. Let's get started. The common questions when we talk about a rental real estate activity are, is it a rental or is it a trade or business? Then, is it subject to self-employment tax? Is it a commercial activity conducted by the individual as a self-employment activity? Or is it a passive activity in which the individual does not participate? Now, if it's a passive activity, it might not be subject to the self-employment tax. But if it's not a passive activity, then it may be subject to the self-employment tax. If it's a passive activity, losses would not be deductible. My goodness, what an array of classifying questions to be concerned with. Let's see how the IRS dealt with one of those questions in an internal legal memorandum. Here is the citation given to the parties who requested it back in November and released to the public on December 23rd, about a month later, which is the usual time lag. The definition of rental activity in Code Section 469, the passive activity rules, doesn't control the real estate rental exclusion in Section 1402 for classification as self-employment activity. Amounts received as rentals are included in net earnings from self-employment if the services provided are substantial enough to be a material consideration for the payments, and we might say, if the services provided are substantial enough that the activity is not a passive activity. In the example dealt with in the memorandum, the taxpayer provides linens, kitchen utensils, all other items to make a vacation property fully habitable. In addition, the taxpayer provides daily maid services, individual use toiletries, the little bottles of shampoo, and other sundries, access to a dedicated Wi-Fi service, and access to beach and other recreational equipment, and finally, prepaid vouchers for rideshare services. That begins to sound like a trade or business, right? For the year at issue, the average period of customer use was 7 days. So the activity is not considered a rental activity for purposes of Section 469. Therefore, given the level of services provided, it is subject to net earnings from self-employment tax. That might come as a surprise to some taxpayers who thought otherwise. Your professional liability coverage can be at risk if you do not come clean with the insurance company in your application for coverage. This is another article from Tax Notes Today, right at the end of December, reporting that professional liability insurers are headed for the exits taking a lighter test that we have in our illustration over here to void policies issued to individual professionals and to their firms, law firms and accounting firms, that fail to disclose the degree of their involvement in promoting and selling tax shelter products. Specifically, the big hits are being taken down in the Southeast on a bunch of bogus conservation easement contribution programs where property that was purchased for $12 million 2 weeks later was syndicated for $94 million value. Those things just defy logic. Take a look at the complaint. In Georgia State Court, certain underwriters at Lloyd's versus Strategic Capital Partners, LLC, which involves a law firm and some of their partners. There's a class action filed in court for the Northern District of Georgia in federal court. So you've got an action in state court, Georgia State Court. You've got another action in the Northern District of Georgia, Hoover versus Strategic Capital Partners, LLC. So it would be easy to look at Strategic Capital Partners as a tax shelter probably gone bad with all this litigation. You might also want to take a look at my comments in the Nichols Tax Update Podcast, issue 21-51, regarding action by Westport Insurance Corporation versus Cowan and Cordon, LLC, against individual attorneys and the firm for failing to fully disclose their connection with, their involvement in, and their association with tax shelter products. It's important that your disclosures in your application for professional liability in that underwriting document be fully disclosing, fully dispositive of the facts, so that the insurance company can never say you didn't tell them everything they needed to know before they wrote your insurance coverage. Common law mailbox rule. It's an interesting fiction. It just isn't available anymore. The common law mailbox rule went the way of the dodo when final regulations under Code Section 7502 were published a decade ago. In Crispino, the taxpayer tries to argue that there is a safe harbor, but the taxpayer's arguments are all based on court decisions that were over a decade old that predated the issuance of the final regulations, which is never a good idea. Your court decisions that preceded an IRS final regulation that had no opportunity to consider the final regulation should probably not be cited as precedent. The Federal Circuit has also held that the statute, the law, Code Section 7502, provides the exclusive means of compliance with the mailbox rule, which is what? Yes, if you prove you mailed it, the mailbox rule applies. How do you prove it? By certified mail, by registered mail. You can prove you mailed it, then the mailbox rule applies. But there is no mailbox rule based on the testimony of your secretary that yes, she mailed it, or your partner that yes, I mailed it. That doesn't work anymore. There is no common law mailbox rule. There is a Section 7502 mailbox rule, and we need to remember that that is the rule. Final federal tax credit rules are going to restrict the creditability of some foreign taxes. Be careful. The final rules require a different analysis to determine that the tax you paid is in fact a tax based on income. This revises the net gain requirement for determining what is income that is being taxed. The preamble to these final rules use 112 pages out of a total 283 pages. That's longer than the average novel. These regulations replace nexus determined by jurisdiction with an attribution rule. After revising the net gain requirement and changing the nexus determination, those two changes together are expected to be more restrictive than the credit which is allowed under current rules. For most of us, that don't have a very complex involvement with the foreign tax credit, this isn't going to matter. But for a few of you who have clients that are affected by and whose tax planning involves a foreign tax credit, and you have operations in several different countries, you had best read all 283 pages of the preamble, which explains what they were trying to do, and the rest of the 283 pages, which explains what they think they really did. And just a word of advice from an old-timer here. You want to follow comments on changes to regulations associated with two code sections, Code Section 245 and Code Section 861, both of which are dealt with in these final rules, for current thinking and application of the rules by those that have made a career of studying these particular rules. That's what I would do if I had clients that had very complex international dealings where the foreign tax credit could make a difference between the profitability of our business for the year or not. Finally, Dawson, docket access within a secure online network. The tax court's search function. The public, everybody, can now search for opinions by case name, docket number, keyword, phrase, judge, date range, or by opinion type using the tax court's case management system. No need to risk going down a rabbit hole by searching with you trying to use Google. The tax court has a competitive search service for its particular business, which is decisions in which they give opinions on the application of the United States Federal Tax Code, the Internal Revenue Code. Docket access within a secure online network. Dawson. There's the link. Download the materials. You'll get the link. And it's been it was a short week, been an interesting week. So again, as always, if you have questions, please submit those questions in SCAPA's chat function for this. I'll be happy to answer them. I check that every other day or so, so that in order to answer questions, try to answer all questions within 24 hours. I thank you for your support and for your good wishes. It's been a very interesting year. We have some challenging things planned for the coming year. We're going to be challenged in the coming year, and we intend to meet those challenges on your behalf. Again, thanks, and please stay safe.